What's going on there, Crypto Wealth Coach members, VIPs, elites, affiliates, friends, family? Trust you all had a good Easter. Got a little Steely Dan going on here today. Put that off to the side. I wanted to run over a couple of technical indicators, setups, and some key information to look for in the market. Let me do a screen share here. All right, and all right, so I'm going to pull up the BTC dollar chart here, and I've got the itchy cloud set up here, which is more of an advanced indicator. But I know everybody here by now should definitely have a TradingView.com account. You do not have to pay for the pro. I have the pro with multiple overlaying indicators. I am a professional trader. I spend quite a bit of time doing this, so I like to have multiple overlaying indicators. You can get a completely free account where I believe it will allow you to have up to 3 indicators. The pro account I think is like 5 or 7 indicators, and then it does go up further from there. You can have multiple login points. The pro suits my needs. It's $14.99 a month, but again, you can just use the simple free setup for the website here. So let me back out of here. I've got I use the Heiken Ashi charts, but these are the standard Japanese candlesticks that you will see pretty much on everybody's trading platforms that they use, whether they're doing Forex, stocks, the S&P 500, whatever. Most traders use these Japanese candlesticks, and I'm sure most all of you know, but a Japanese candlestick basically gives you 4 pieces of information. It gives you actually 5. The open, close, the opening price of the day, the closing price of the day, the high price of the day, which will typically show in a wick if it went beyond the close, and there's also a low point of the day, which is the lower wick, hence the name Japanese candlestick, right? It looks like a candlestick. The 5th piece of information that you get is whether the price went up, which is a green candle, or down, which is a red candle. But that's the basic quick synopsis of a Japanese candlesticks. I will tell you what I actually prefer to use are the Heiken Ashi candlesticks, because you get a much smoother. I wish I had turned these messages off here. You get a much smoother view of the momentum in the market. And you will see here, you get a long string of green, you get red. You get green, you get red. You get green, there may be some small, red in here. Overall, the momentum goes one way or the other. You get up, down, up, down. Yeah, you may have some, indecision in the market, but generally you can see these patterns much cleaner, right? So if we switch this back to Japanese candlesticks, it's a little more, well, what's the market exactly doing here? So the Heiken Ashi charts are my preference. It keeps things clean and simple, easy to look at. You still get the same information, but it's just in a better viewing format. And when you scroll out and you look at the last, whatever this is, 18 months of the Bitcoin charts, you can really see where the momentum went in here. Why is this important? Well, the most simple, easy indicators or analysis that you can use if you're going to be diligent daily, have your 30 minutes every single day, your hour every day where you analyze the markets, is using a simple, here, let me put this thing on stun, is using the simple Heiken Ashi chart and going from the previous day's candle. Why is that important, right? Because if you look, we had this big bull run up in 2017, early January, right? And then the market started dumping. And people who had no idea what they were doing, or the typical crypto investor joined during this upswing here, during this major bull market in December, October, November timeframe, and then lost their ass coming down through here, right? There's horror stories everywhere. Maybe some of you fell into that category. You bought at the absolute high, and then the market came down here, and you lost 80%, 85% of whatever you invested. If you bought a Bitcoin at 19,000, and it's worth around $5,500 here, and you've just been simply sitting and holding on it, while these guys over here who were holding and didn't really know what they were doing were making money. The guys who bought in here lost their asses, right? So why am I bringing this up? With a Heiken Ashi chart, if you can be a consistent daily trader, and whatever your 30 minutes an hour is every day, where you're going to analyze these markets, if you go in and you look back at the yesterday's candle, right, the previous day's candle, not today's candle, the previous day's candle is an indicator of where the market is going to go. If you'd have bought in here when you had your first green candle, you'd have rode this up. Had a red candle, you'd have sold out. This is a simple, consistent following the charts. As long as you can be consistent, that's the key. Hear me say that again, consistency. If you log in here once a week, you're not going to have good success with Heiken Ashi. If you can log in here every single day and be consistent with it, whether it's 6 a.m., 6 p.m., 9 p.m., whatever that daily time is that you have, if you had followed this Heiken Ashi chart in 2018 and simply sold on the red candles and bought on the green candles in a market that was down 80, 85%, if you simply followed this chart with daily consistency, you would be up somewhere around 750 to 800% in 2018. You'd be up even higher in 2019 with this big boom, right? If you can avoid the losses and capitalize on the gains, you're winning, and you're winning big, because you're going to compound on top of your wins, avoid the losses, and then compound and grow the account. 750 to 800% in a bear market is significant. Now, this works for the big coins, Bitcoin, right? Ethereum, Litecoin. Do not try and apply this strategy to the smaller alternate coins. It will not work. They are far more volatile. You can have success with it, but there's going to be much smaller opportunities for wins and losses. You're better off playing with the big boys on this, Bitcoin at $5,500, and simply following the trend, okay? So that is the first one I wanted to run over with you. The other one that I wanted to run over, and let me pull up the EOS chart. EOS, the US dollar, right? Okay, so here is the other trade setup that I wanted to go over with you, and something to put in your back pocket and pull out whenever. This is not a daily trade. This one will be a setup trade, and this is what I call the J curve trade. And EOS is one of my absolute favorites, because for those of you who've been in my groups, been following me, you may recall back in October, I forget, 17th, 18th of 2017, I put in a recommendation for EOS at around whatever it was, 45, 50 cents, 55 cents, something like that. And I did EOS based on the J curve, right? We had, here, let me zoom in and go back all the way back here to when that was. Let me pull it up. All right, so this looks like a J, right? It's an ugly J, but essentially it is a J. You've got your high point over here. It comes down before it spikes up and makes big profits, right? So EOS had a ICO that released back in the summer of 2017. I watched EOS. It was up, whatever, $5, $4. It's coming right out of the gates, right? These are daily charts. Immediately it went from $1.23 to $5, and then it started selling off. Everybody started taking profits. EOS came and it dipped all the way down in here. Again, somewhere here in October, it looks like about 50, 52, 54 cents. Sorry, my email message is popping up on the screen. Right in here around, I forget the exact day. I'm sure you could look it up in the, the free group. But it was right around here, this middle of October. I put in the recommendation at that point to apply 2 Bitcoins worth of capital funds into EOS. And, I'm not sure what that was. I think Bitcoins were hovering maybe around, $8,000, $12,000, something like that. Basically, if you'd have put $25,000 into EOS and followed this J-curve strategy, right, coming from the high, accumulation to the low, and then boom, it takes off, you were up $750,000 on that particular trade. And this trade is actually the one that ultimately made me decide to start a paid group. Because I realized, folks in the free group were not valuing the information, were not applying it, and very literally had an opportunity to make $750,000 or more on this trade. But this is your standard J curve trade. This typically happens, 2017 was a big ICO market. There were ICOs coming out left and right. Everybody and their brother was doing an ICO at that point. The ICO market's kind of cooled down a little bit, but we have the IEOs, there are still ICOs, new tokens that release to the market typically follow this J-curve strategy. So if you can identify good projects with good fundamentals, good solid leadership, right, good white papers, following the announcement in the group with the 11 fundamentals, that we look for in a solid blockchain project. These projects typically follow this J-curve. They will start high. Everybody who is in it will start selling off and taking their profits. It will come down to a low point. It will start the accumulation process, and then boom, it takes off and you get major profits. So this is not a daily trade. The J-curve strategy is one that you're going to want to apply to particularly new coins, new tokens, new ones that come to the market. And then you want to watch for a minimum 50% sell-off, 60%, ideally, to go from whatever this is, it looks like it closed about 370. We bought in at around 55 cents. Mathematically, I'm not sure what that is. That's somewhere in the neighborhood of 75% or more. Drop, right? That comes way down before you will look for that opportunity to buy in at the absolute bottom, and then it will take off. How long that takes, who knows? Fortunately for us, the rest of the market obviously did take off at that time. But there's, you can find dozens and dozens of these coins that follow this typical J-curve strategy. Very simple to understand. Yes, this is an ugly J, but you get the general idea, right? Wait for the retracement of 50 or 60% or more before you buy in. Buy it in stages. If you've got $1,000 to invest, I would invest $333 in a position. Wait a week, see what it does. If it goes up, great. If it goes down, buy more. Buy another $333 position. If it starts going up, great, you're making money. If it goes down, buy your final $333 position to get your $1,000 in. That's dollar cost averaging, and will ensure that you help yourself get the best price when you buy into a J-curve strategy like this. So I think that about summarizes it. I will post this in the group. Feel free to make some comments. This is not a live. I did record this in order to get the screen share going for you guys. I haven't quite figured out how to do a screen share on a Facebook Live, but I'm doing this with a Zoom, and Heiken Ashi charts are an outstanding way if you can be a daily, consistent trader, almost religious to cryptocurrency investing. Follow the Heiken Ashi strategy. Follow it with the top 3 coins. I would not try and apply this to XRP. It doesn't have enough, high dollar price behind it in order to make it worth your while. And XRP has been in a downward channel trend for about 4 or 5 months. I'm still waiting for XRP to break. Bitcoin and Ethereum, Litecoin, great options for the Heiken Ashi strategy. And then your other setup for your consideration today is this J-curve strategy. And if you start poking around, if you start looking at new projects that get released wait for that 50%, 60%, 75% drop. Start buying into positions on good projects only, right? That's the other key. Make sure you're investing in good projects. If you want to bounce some ideas off me, I'll give you a 5-star rating or whatever, and help you make a best choice. But buying low and waiting for that J to take off on the right side of the screen for pure profits is an outstanding way to make good money in the cryptocurrency market. All right, I appreciate you guys, and trust you have an outstanding evening. We'll talk soon.